in senior housing, the building is almost the least important part, which sounds crazy, but
Yeah.
the value lives in whether the operator can keep that building full in that specific market. And senior housing in general is just a different animal because it's so complex. It's like multiple businesses running in one. You've got, not only do you have housing, but you have hospitality, healthcare, dining, transportation, and a multitude of other services all kind of wrapped up together and all needing to run kind of seamlessly in order for that resident to have a great experience and want to stay.
Hey, friends, welcome back to Commercial Real Estate Unfiltered. I'm your host, Caleb David, and this is a podcast where we create space and we build community. Today's guest, I'm really excited to get into because this is a very niche part of the market, commercial real estate market. And our guest today is Jerry Vinci. He's a senior living marketing strategist and the founder of CCR Growth, a demand generation agency focused on increasing occupancy and profitability for senior living communities through data-informed digital marketing and CRM automation. He's also the host of From Leads to Leases, the top-ranked senior living marketing and sales podcast, so you'll have to check that out. Jerry, welcome to the show. Thanks for being here.
Thanks for having me, Caleb. I appreciate it.
Yeah, so maybe give us a little bit of background on, how did you end up in this very unique space?
That's a good question. And my intro kind of throws people for a loop often. And a recent development, we've actually established another side of our business that now focuses on the capital side of senior housing. So that's kind of how I got into this space. But I'm not brokering deals, I'm not buying office or retail, and I'm not running a fund. I do run two firms that both live inside of senior housing. So the one firm that's I would consider more relevant to your audience is called Nordon, and it's spelled Nordon. And I co-founded Nordon over the last few months to fix one specific problem that investors kept running into in this asset class specifically. And they're putting capital into senior housing without really having any independent way to validate the one important variable in this space that matters more than anything, which is the operator, not the building, but the operator. And if the operator can sustain or grow occupancy in their specific local market, that was a question that there's no amount of underwriting right now that really is answering it. So Nordon came in to give investors that information through a diagnostic that we run. That way, before you close, you actually have information that's actionable. So, you can decide whether to reprice the deal, to restructure it, to hold money back, or even just to walk away. And then, as you mentioned, the other firm that I operate is called CCR Growth, and that's really more for the operator side of senior living, senior housing, where we work directly with the senior living operators themselves on the systems that actually fill the building. So whether it's a lead generation, whether it's a sales optimization process or CRM development, or if it's something more on the operations side of like helping to transition or convert those leads from the sales team to actually moving into the community.
Yeah, absolutely. Well, how did you end up in this space though? I mean, like what drew you to the senior housing asset class?
Yeah, I mean, I think it started more on the marketing side than the housing side of it, but really just watching all four of my grandparents go through some level of senior care, that was kind of the catalyst that started it all. And that was about 20 years ago. But I saw my family trying to navigate some really complex care decisions in a very short amount of time, which is typically the case for most families who get into the senior living space, unless it's like an independent living community. But anybody who's looking at like assisted living or memory care or skilled nursing knows exactly what I'm talking about. It's a very high stressful situation that maybe the family probably should have been looking at like 12 months prior, right? But until like mom falls or has a dementia diagnosis or there's some other health event or mobility issue or something else that's causing them for their life to have to drastically change, and for the people who support them's lives to drastically change as well. And I found myself kind of in the middle of that. So I got my start in marketing and advertising. I mean, my parents own and operate a printing business. And so I had grown up doing that. I mean, I was running a printing press in like seventh grade. I learned how to run a printing press. So I got this weird, interesting perspective about commercial marketing and advertising at a very young age. And it was interesting to me, but selling widgets on a shelf or trying to help a business increase sales, those types of things were interesting and challenging, but they never really were something I was passionate about. And when I fell into senior living and I started to see how, we're still just providing, those marketing services and helping with growth inside of a community. But when you think about the end product, when you think about who are we helping, it's the families themselves, helping them connect with the communities that are the best fit for them, and then helping communities find best fit residents. And there's so much wrapped up and so much responsibility wrapped up into that because there's the human factor, right? And
Yeah.
that's really what we fell in love with. And we've built our whole mission as a company around that.
I love that. And I think it's very often, I think in this space, we always hear the stories of, when things go wrong, and for you to be able to step
Yeah.
with that mindset and with that heart and attitude, I think is awesome. Going to kind of switch from kind of that purpose thing to let's talk about like investment in this class. From your view on the current commercial real estate market, how are you seeing or what mistakes are you seeing investors make and how they structure a deal or how they underwrite the senior housing versus, say, multifamily or multi-tenant retail center?
Yeah, I mean, I'll say again, I came at this from the operating side and not from the capital side first. So I had almost 30 years in sales, marketing, and operations. And I'd say probably for the last 15 of those, I've been specifically focused on senior living. But what pulled me towards the investor conversation is that I kept watching people buy these communities, on a clean set of financials and then get blindsided by something that was never in the model, typically like 6 to 12 months down the road. And if you look at everything on paper, a lot of times these communities, they look like such a sound investment. Number one, the demographics are great right now. Anybody who's familiar with the silver tsunami knows that, like, if these buildings are run well, they should essentially fill themselves, which sounds easier said than done, but that's the truth of the situation. So the demographics typically are pointing in the right direction. On paper, buildings, they look fine. But then, like, they sign the deal, and all of a sudden, occupancy drops from 90% to 80%, and everybody keeps wondering what happened.
Yeah.
So, what typically separates a great commercial investor from an average one, it's not necessarily the property, the box itself, it's the eye. It's you walk into a building, and you can see the value that nobody else sees, which is great. That's the value that I think is like that's the instinct that someone needs to have in senior housing as well. But you're sizing up different things in office or retail. The values in the asset, the lease, the tenant, all of those types of things. In senior housing, the building is almost the least important part, which sounds crazy. But
Yeah.
the value lives in whether the operator can keep that building full in that specific market. And senior housing in general is just a different animal because it's so complex. It's like multiple businesses running in one. You've got not only do you have housing, but you have hospitality, healthcare, dining, transportation, and a multitude of other services, all kind of wrapped up together and all needing to run kind of seamlessly in order for that resident to have a great experience and want to stay.
Yeah. Yeah, and then being able to fit the communities that work for the families, I think that's kind of that marketing side of what you do, kind
Yeah.
of fills that gap. And, so obviously we're talking about the boomer generation, it's kind of tipping the scale, I think, in the next couple of years. Why are most marketing communities marketing to the wrong demographics, or how are they getting the word out?
Yeah, I mean, there's still a lot of communities that are traditionally looking at the old-fashioned methods of marketing, and this is one of those industries that's typically behind when it comes to adoption of tech or adoption in new ways of doing anything. And it's like if it ain't broke, don't fix it.
Yeah. Yeah.
There's that mindset. So you'll still see people spending thousands upon thousands of dollars on direct mail brochures or say like a billboard sitting on the side of the road, and like
Yeah.
and those just don't really move people anymore. I mean, what works is definitely not a clever brochure. It's showing up, the moment. It's really about trust building now, more so than like getting the word out, right? It's about like when a family reaches out to you, typically they're in a high state of crisis or stress, and like, and how quickly can you respond is the first question. Like, are you the first to respond with a human being responding within the first 5 minutes, or is it taking your team 24 hours or longer to respond? And during that 24-hour window, who else is that family going to speak with? So, I
Right.
think that's probably one of the biggest challenges is just, that speed to, and I don't even say speed to lead, it's like speed to human nowadays. How quickly can your sales team connect with that prospective family and help them navigate that? Because it's not like they're calling and they're like, we're ready to move in, let's go. It's like they're calling with 50
Yeah,
questions and concerns, and they're going to want to set up a tour. I mean, the average length of a sales cycle for senior living is about 180 days. So it's not a quick process.
right. So what are you finding that is working? Like our targeted ads on Facebook working? Because I know a lot of the boomer generation is on Facebook, say more than Instagram. Where do you think some of the marketing has gone wrong and what's working?
I think who we're marketing to has kind of shifted or needs to shift if it hasn't already. A lot of times you see a lot of the narrative and the marketing content itself geared directly towards the older adult. But most of the time it's the adult child who's making that choice or decision, or if not making it, is very integral in the process.
Yeah.
I think there's a statistic that says like regardless of the level of care, whether it's like independent assisted living, memory care, or skilled nursing, adult children are involved in like 80% of those decisions that get made. So they're highly involved. So making sure that you're speaking directly to them, especially if it's like a higher level of care, they're going to be the ones that are going to be making the decisions and the ones that are really grappling with a lot of those family dynamics, whether it's like, guilt of like putting mom or dad into a place other than your house, right? Or maybe dealing with like your brother or sister who don't think that mom or dad needs that kind of help and they could just live at home, and but because you're the one who's been doing it, that's not the case. So there's a lot of that happening where they're just marketing to the wrong person or the wrong demographic. Again, speed to lead, another one is that if you can dial that in and consistently do that, you should have more leads and more tours booked than you should be even worried about. The third, I think, is owning your demand. So, and I know other industries are similar to this one, but there's this big push and pull in this industry towards like third-party aggregators. So I'm sure you've probably heard of like a Place for Mom or caring.com, and there are these third-party referral agencies that essentially will just, if somebody goes to their site and says, hey, I'm interested in assisted living in Atlanta, Georgia, they're going to pull 20 communities that are within that area and send that lead to those 20 communities. So now everybody's competing for the same person who may or may not be a good fit for the community.
Right.
And then not only that, but when that person eventually moves in, now that community has to pay the entire first month's rent and then sometimes even more than that to that agency
Yeah.
for giving them the move in essentially. So it sucks you dry in terms of your resources for any move-ins. You're going to be in the red essentially for the first 2 to 3 months.
Yeah.
So that's problematic. And a lot of times these communities, they're leaning so heavily that they haven't built any kind of a marketing engine internally at all. They're just saying, hey, we're just going to rely on these third-party aggregators. They're sending us leads. We don't need to build that stuff ourselves, but you're just renting a pipeline at that point. You don't own it.
Yeah.
So if anything happens with their algorithm or maybe the way that they send leads to your community, I mean, you could really be in dire straits pretty quickly.
Yeah. 'Cause not in
Um,
control over what they're doing and how that affects your business. Yeah.
the other thing too to keep in mind there is that the average length of stay for, say, assisted living is less than 2 years. So essentially, every year you're having to refill like half the building.
Yeah.
So if you're relying on an outside party to supply you with leads, I mean that's just a recipe for disaster.
Yeah. It almost sounds like you kind of mentioned the push and pull, but like for an operator, they have to attract, but then also it seems to me like retention would be pretty important. And how do you see that playing out even with such turnover? It seems like you got to be doing both things.
Yeah, I mean, that's everything that has to do with the operator right there is once they're in the building, then what happens? How do you get them to stay longer? How do you increase, because that lifetime value of resident, if you can increase that,
Mhm.
I mean, you're writing your own ticket at that point because like the difference, say between like 80% occupancy and 90% occupancy, nothing changed. All of those costs are fixed in the building. Like nothing really inherently changes at all if you increase occupancy, aside from the fact that you're padding your bottom line, but your staff is in place, the food costs, the activity cost, like all that stuff is all just hard fixed costs at that point. So everything else is just icing on the cake. So if you can figure out that operational issue that's maybe, stunting your growth, that will completely change the name of the game.
Yeah. And you mentioned the silver tsunami, and that being as a demand boom, why do you believe the real risk is the physical infrastructure? And are you speaking of the building as an asset as a whole or amenities, et cetera?
Yeah, I mean, demographics kind of define the category. Like there's if the building is run well, then they'll never have a problem staying full, given the demographic wave that we're about to hit. I mean, we've been hearing about the silver tsunami since like early 2010, and everybody's just been kind of waiting for the last 15 years for it to finally hit. 2026 is the first year where the the older end of the baby boomers just turned 80. And by 2030, all the baby boomers will be 65. But senior living it's an older game. It's not for the 65-year-olds anymore. Maybe it's at, 20 years ago that was the case, but the majority of residents inside of senior living are 80 to 85 years old or older. So we're just on the tail end of that now. So we're just starting to see that demographic push. But when you look at like the numbers and you think about the fact that like overall, the industry has had 19 consecutive quarters of occupancy growth. And
Wow.
in the first quarter of 2026, I think it was sitting at about 89%, and it's supposed to crest over 90% by the end of this year. So those numbers are just going to continue to increase. And you think about like, okay, how many seniors are we actually talking about here? By 2030, the number of seniors over the age of 65 is going to increase by 35%, but the number of seniors over 80 is supposed to increase by 111%. So it's going to more than double. And then by 2050, there's supposed to be triple the number of seniors over the age of 80. So this isn't something that is just a few year blip and then we're going to go back to, how things were before. And
Yeah.
even if you look at like millennials, there's actually more millennials than there are baby boomers. So this isn't a wave that's necessarily going to crest and recede really quickly. This is like the next 3 decades, essentially, we're looking at. We need some significant growth in the space. So yeah, so that's demographically, that's the piece of it. That's the challenge. We have a demand wave that's not even close to cresting yet. But then we have supply that's so undersupplied right now that we don't have enough space to put everybody,
Right.
even if we wanted to. We have in 2025, for example, there was about 20,000 units that were built, but between now and 2030, we need about, I think it's like 560,000 units to meet demand.
Wow.
So, and yeah, I mean, we're at like, I think we might have like 150 units, 150,000 units by 2030, but we're going to be like 370,000 short, something like that.
Wow.
So, yeah. So
So
it's
there's
like
such an opportunity, it sounds like, for investors to pay attention to this because
yeah,
for me, I felt like,
developers.
yep,
Yep. Yeah,
yeah,
there's about a $275 billion gap between what's needed and where we're at in terms of development. But even the best development year that we've ever had in terms of building, I think the most units that were ever built in a year was like 56,000 units or something.
wow.
So even that, I mean, we would have to 2 to 3 times our output in order to meet demand. So I'm not exactly sure. We're still trying to figure out how we're going to meet those numbers.
Yeah, yeah, and I think with construction costs that have not gone down, and
No.
tariffs and all the different things, right? I mean, it makes it that much more challenging for that developer to to meet that need, and that's, and ultimately that affects the families, right? Going back to, that affects their costs of staying there if they are able to get something like that developed. So I know, like in the office space, like we're starting to see a shift with the landlords who know what they're doing. They're understanding, post-COVID, their buildings have to be a little bit more experiential or flexible, so it's about creating spaces where people want to be. What are you seeing in the senior housing world, maybe that is a little bit less traditional on how it used to be as far as creating spaces and activities for people with the operators?
Yeah, I think just in general, baby boomers, they're much more particular about what they want. They come from a lifestyle and a background that's far more affluent than previous generations. I mean, they're the wealthiest generation ever in the history of this country. So they're very particular about what they want and their expectations. And previous generations, like I think about my grandfather, like he was happy just to have a place to lay his head at night, right? Like that was just the nature of like
Right.
their generation, the silent generation. But then when I think about baby boomers, they're all of these communities nowadays, they've all been built up to the point where they all have the same great list of amenities. They all have this amazing lobby with the chandelier and the piano in the corner,
Yeah.
and that's not really what sells them anymore. It's really about the experiences. What are they going to experience while they're in the community? What is the day-to-day life like? If they don't see that moving into that community, they're going to be able to live better than they are right now, then the chances of them doing it are very slim. Less than 10% of the entire addressable market of seniors will ever move into senior housing.
Yeah.
So you're basically selling something that the majority of the available market doesn't even want. And the ones who do move in are, they love it, but there's still this old narrative hanging around that, these are nursing homes and, it's like prison food. And you hear all these things that, I mean, even my parents to this day, who are in their late 70s, they still say those types of things. So they still haven't been shown what senior living can actually be an experience like.
Yeah, so an investor developer, they need to be paying attention to what people are looking for and asking, and probably pay attention, do some surveying, do some market research to find out as they do build more, as they're able to do that, they are positioning themselves for an operator to become successful.
Yeah, and I would say too that it's not necessarily about differentiation anymore. Like that used to really be the selling, like why would I go to this building versus the one down the street? It used to be, well, this one has XYZ and this one doesn't. But now I really truly think it's really just about how well the building is run because that will say everything. Like if I look at, the reviews and there's 100 5-star reviews in this community and everybody has great things to say about it. And I go there and tour and it's the same experience in person that I saw online, that's going to say a lot more to me than, some other factors that maybe used to sell me on what was good and what wasn't versus today.
Yeah. Yeah, and what advice would you give to an investor looking to get into this space? What should they be looking for? I always believe that you need to have the right team around you, to help you make the right decisions. So, what advice would you give to investors that are maybe looking to capitalize on this wave?
Well, I mean, in terms of like so I will say I'm not an underwriter. I'm not an expert when it comes to the financials behind the building, but what I'm looking at specifically is how that building is performing in the local market. So I think getting an understanding of who the operator is, if you're looking at a specific building or maybe buildings, because a lot of operators are,
Yeah,
they have multiple buildings in their portfolio, and maybe looking at performance across multiple communities because if they're killing it in this one market, but they're struggling in another one, why is that?
yeah,
Is it the operator? Is it someone in the building itself? Is it just that market is different? Like really understanding the local market, I think would be my first piece of advice because senior living and senior housing is so hyper local. I mean, over 90% of residents typically move in from within a 5 to 10 mile radius of the community itself. So, you're looking at a very small area. It's not like you have to dominate the entire state of
right.
Georgia or wherever you live to really see results. It's really just, okay, can within a 15 miles outside of this community, am I as visible as possible? So just looking at how the operator is positioning themselves in the market, and then looking at like the publicly facing signals too, like what is their reputation? How often are they getting reviews and what are those reviews saying? Are they talking about the food program, the staff, the activities director, like all of those types of things? I would just really try to get a sense for how that operator is showing up in that space first and foremost before anything else. Because again, like demographics, if that operation piece is solid, everything else should be golden.
Yeah, yeah.
Yeah.
No, this has been super unique and just very different from any other conversation I've had. So I appreciate you being here. And
Yeah.
where can people find you, connect with you, and engage?
Yeah, if anybody's interested in learning more about the capital side of senior housing, you can find me and learn more on nordonadvisory.com. It's Nordon advisory.com. And if they're interested in learning about the market facing dynamics in terms of performance and growth and occupancy within the senior living building itself, they can check out CCRgrowth.com. That's our demand generation agency.
Awesome. Well,
Yeah.
we'll make sure we have all that in the notes. Thank you again for being here with us. Everyone, please share this with anyone that you believe that will benefit from it. Give us a like, give us a follow, and make sure you turn it into his podcast from leads to leases. And we again will see you guys next time and hope you have a great rest of your day. If today's episode gave you valuable commercial real estate insights, subscribe, rate, and share it. Connect with me and the David Commercial Real Estate team through the show notes. Remember, real estate is more than buildings. It's about building community. See you next time.